your, I'm still seeing your stuff.
Yeah, it's just weird that it happened right after it gave me that warning, which is stupid that it gave me the warning because I had my camera on. So that's why I took him off of it because I think putting him next to me maybe because I'm sure people do that where they do the whole take a picture and you got a person that doesn't ever move, giving guidance, right? And like, mm-mm-mm. Okay, we are good, guys. I usually give it a minute or two, let people come in. We at least I didn't take a trade in the mentor group today. Um, Not a great day, not a great range to trade. So if you didn't take any trades this morning, I don't blame you. Right? Let me go through here. All right. Briefly, some things we were talking about in the mentor group on the pre-market analysis is we're in a little bit of a sticky range because first off, those that are in my um, development session was pretty cool, huh? When I was like, seen this structure before. We're not going down, we're going up in a big way. And then boom, there it went. So it's really cool to see that for those that were in that session. But now we have to analyze it. This range is huge. Every time we've ever hit above this range, we go almost directly there. A level we identified was somewhere between 720 and 730. There's a lot of instances historically that when it broke this range the first time, that held as resistance and dropped us to retest that level. That would also give us kind of a halfway or so liquidity reclaim, right? Which is what I would look for in a push like that. Um, so I'm kind of expecting at some point that we'll come back and test this. I just don't know. What we don't know is it going to do it before it gets to here? Or is it going to get to here and then do it, right? That's what we don't really know. My thought is, and I can put a little line there just to, like, we'll just do a white one. Somewhere, I'm going to put it at like 730 because it was somewhere in that range. That's a safer spot. So if market open, and this is just my opinion based on some TA, if market open decides it wants to sweep up, and it cannot breach and hold that 730. If we breach it and then we come back down, decent possibility, right, that we might see some downside today, right? Just a short term downside. There's a lot of technicals within this that are going to matter though. So this trend line is one that's going to be good to watch just for open. If our open sweeps, doesn't matter which way first, but it cannot breach this trend line. It's going to pressure high, like pretty hard. If we sweep high, come back down, and we sweep this trend line, this line really matters. So we identified this is our high, this is our low. So that's kind of 618 to 730, right? So, which is, I know, is pretty big. But market open can easily go that wide. So if we sweep this trend line, but we hold this level, or even if we sweep this level and then reclaim this level, that reclaim is going to be pretty good. It's going to go up pretty well. If we sweep here and we come up and we can't reclaim that level, or maybe we tap on the trend line, right? Like that, then it's going to just dump and we're for sure going down here. So it's a very tricky area, guys. It's not, even for me calling it out for you guys, it's not my favorite place to do TA with this because a lot of you guys know I love these lines. My lines are usually pretty tight for high time frame, and they work pretty well. This one I purposely leave wide because every historically most I'd say 80 to 90% of the time it jumped pretty heavily from here to here. There's just not a lot of resistance Only place I could see would be somewhere here, right? And so if I take this high and this low, being a top and bottom trader, right, I'm kind of in the middle of my range. It's not the best place to take a trade, right? We are clearly trending up, but we know that we do have a lot of gap fill down below, and I'm curious to see how open reacts, right? Because we do have a news push that instantly lost, right? And so this is kind of our news high, if you will, like we trade that. We'll call that like the news low. I'm not going to mark it because I don't want too many lines on there, but anything that we do in open that stays inside that is internal of the news. We break above that, we go up, break below, we go down. The only concern I have, and this is what I can see maybe happening, again, I don't know until we see market open kick in. I could see a deep push, maybe a first pull with a deep push into here, which would make people believe, hey, we're super bullish, and then a deep reclaim. I could see, the old if I was a market maker, right? But we'll see, right? It's tricky because even in pre-market, you think about it, from 7:30 right here, right? We had a couple of good bursts, through some news drops, and this one we weren't sure what that was. We were like, tweet, right? But look at we have the low, we have the high, and we've stayed internal through kill zone and pre-market. Like, remember, guys, when I talked about that a long time ago, I don't know, months ago, really, I think it was, when sessions should do certain things. Kill zone is supposed to stop hunt, right? Well, if it's supposed to stop hunt and the stop hunt pressure is up, that would tell you we're going to likely be more down. But then if we're going to be more down, usually kill zone will stop hunt, and then pull back, and then pre-market would climb back to those stop hunts. Then market open would dump, right? This one's tricky because we have those stop hunts kill zone tried to do, but pre-market didn't do shit, right? It just went sideways. And so pre-market's not really giving us any direction, if you will. So I think it's going to be a tricky day. So when I read the market like this, and I think that it's going to be a tricky day, what I like to do is just take a moment, not be aggressive on my entries, right? And I want to look and see what is playing out, right? Is the bearish stuff playing out? Is bullish stuff playing out? Hard to tell in there. Otherwise, other than the fact we can say, okay, we got a little compression in here. We broke out of it. Couldn't break the 5-minute, and now we're dumping, right? Now we know we have a low here. The fact this broke there, and really arguably it broke there, right? We keep looking left. Few lows within here, right? But this right here is your most significant low. The fact that we closed below that, this should pull pretty heavily. The fact that we just broke the 200 should pull, at least to this trend line. So if out of nowhere we just push, to me that's a bearish play that is invalidated, right? And we want to watch that. So I was telling someone, I don't remember who, it was one of the meetings, that if you're not sure on your trading, sometimes it's good to just see, is the market even doing what it should do, like a couple times. So like for you guys, and I might even do this too, we'll see, you might want to look at it like, let me be patient on my entry, right? And let me look at the micro and see, let's just count it, right? Like, see again, right? It should have been bearish, and look, we're reclaiming it like nothing. Now it's 2 minutes from open, so volume gamblers are getting in, right? All that. But if I'm like, man, I don't feel like being long in this range because I feel like we're gonna come back, you should count at least 3 to 5 bearish things to play out before you take a bearish play, right? Everybody who tried to short yesterday, remember I was kind of preaching during and after the calls, do not short this top. Just don't short it. And we had like 3 solid bearish formations that failed, right? And so we don't know if we're gonna have another, right? Like this is a bearish structure right here, right? We have our tops kind of getting the lower high. We got the sweep wick, which would arguably be a stop hunt. This should pull, right? And so, but we've already invalidated 3 other ones, so who's to say we're not going to invalidate this one, right? We don't know. So we got market open, guys. For those that are new, I'm not giving entries. I'm just going to give guidance through it. You know, if this does this, should do this. I'm going to give probabilities of things that I can. I will turn on Neo, but I'm going to mute him at times. He's starting to say, he put I'll explain that later because we got open coming, but let me refresh it. Let me see.
Hello, I'm Neo. Let's capture the move.
Capture the move. All right. I'm going to unmute him. Holy swing. Look, remember the part where I told y'all, like, it's going to be a wild day.
The 5-minute time frame shows a bearish trend, but price action on the 1-minute time frame has been attempting to push higher against this, indicated by the doji and the attempt to break the prior high. However, the immediate 15-second trend is bearish, suggesting potential downward continuation or a trap if this initial push fails. Without a clear higher high on the 1-minute or acceptance above a key resistance, a high probability trade is not evident. Sentiment: bearish pressure, confidence, 4 out of 10. Reason: the 5-minute time frame remains bearish. The 1-minute has shown indecision in a failed attempt to push higher, with the most recent 15-second trend turning bearish. Concerns: lack of clear higher highs on the 1-minute time frame, bearish 5-minute structure, and immediate bearish pressure on the 15-second. Summary: the market is showing signs of weakness on the larger time frames. While there was a brief attempt to move higher, it did not gain traction. The current short-term trend is pointing downwards, suggesting caution for any upward-looking trades.
Not terrible advice yet, as of now, right? Because remember, like I said, so far we're not far off of what I was looking at. Here's our high. This is critical. Remember we were saying if the first move, I don't know, that was so damn fast on what the first move was with it, but you can see right here, just for the market open, actually we were down. So that was the first move. So remember what we said, if we go down first and we can't breach that low, we're going to come test the high. If this cannot breach and hold this high on this push, then it's going to come test that low. That next low matters. If we create a lower low, it's going to be a bearish day, most likely, right? If if it comes back and we hold a higher low, right, then it's going to really push. And so this push that's kind of trying to sustain is holding, right? And so remember guys, he looks at things as he sees it, right? And so he doesn't really still understand that, hey, we're in market open, right? Stuff can get crazy. He just doesn't know that, right? There's no way for him to know that right now. So he's going to look at it as he sees, right? But we want to watch this push right here is everything. So watch the DOM, watch the 15-second. If we get a doji in here with the close below, and it's below like 716 area, right, then it's going to come down pretty fierce, right? So be careful chasing longs. If you want to take a long, if you're more biased long, right, you want to kind of come down here and play it. You don't want to play it too much here. Anything short of 730 is runs the risk of dropping, right? Anything above 730 is likely going to push pretty hard. So normal market open structure, we like to do a down up halfway before it goes up. So if we end up getting a halfway or anything that is higher low than this, so if it comes down here and then just takes off again with momentum, man, it's just going, right? So let's keep looking at our risks. We know we got the 15-minute Lisma there, so we could sweep up to that before it tries to break. If we come past that 15-minute Lisma, guys, that is past all of my resistance that I would be worried about, and I would not short that top. I would be surprised if it does it on the first try, but we'll see, right? Because it's market open, anything can happen. But normally, I mean, the market's bullish. The news is bullish. The pressure here was bullish. You know, you can see we did the first sweep south with the push, which is, you know, bullish. But a lot of times market open, right, it likes to kind of find its top and then do a deep pull and then push if it wants to like really go, right, to kind of gain that support. So, but the only thing I have overhead really, guys, is like 750, and then I ain't got nothing until like 869. So, just be really careful, guys. Okay, so micro's starting to break down. So I'm watching the DOM. When you see me turn my head right, most of the time I'm looking at a DOM. Trying to see. I love the DOM because I can see the up, down, up, down, up, down, right? It kind of tells me where the pressure is. So we're not really getting that bearish pressure like I was thinking quite yet.
The 5 minutes time frame shows a clear bullish trend, with price pushing higher and the LSMA indicating upward momentum. The 1 minute time frame, while also bullish, is showing signs of consolidation or a potential pullback after a significant push higher, as indicated by the LSMA and the recent price action failing to make a decisive break beyond prior highs. The
So there's
15
that 15
seconds
minute I
offers
was telling you
confirmation
about.
of upward bias but lacks the structure needed for a high probability entry at this moment. Sentiment. Bullish pressure. Confidence. 6 out of 10. Reason. The 5 minutes and 1 minute time frames are predominantly bullish, with upward trending LSMA and EMA price has made significant upward progress on the 5 minutes, indicating buyer control. The 1 minute is currently within a range after a strong push, showing potential for continuation if previous resistance is reclaimed. Concerns. The 1 minute time frame is showing signs of consolidation after a large push. There is a lack of clear continuation or expansion beyond the most recent highs on the 1 minute, which could indicate a trap or a deeper pullback is forming.
Oh, he said
The
deeper
absence of a
pullback.
decisive breakout on the 1 minute raises caution. The market is currently showing strength on longer time frames, suggesting buyers are in control. However, shorter time frames indicate a pause in upward movement as price consolidates after a significant rise. This suggests we need to wait for further confirmation before entering. A strong push higher that breaks recent resistance would confirm the bullish trend.
I don't know, man. I'm curious to see how this plays out, but every time this guy ever says, like, I don't know, looking at this, you know, if it fails to create whatever, it could lead to a deep pullback. Maybe we, like, dumped last time, but I'm not saying it's going to, right? But I like to listen to the words he uses, right? But again, remember, I'm watching this 730 on the micro. We broke it, and notice it held at 726, which actually I think was the number we called, if I remember right, in the pre-market. But I put 730 to be safe. So if we keep tapping here, it's going to push this. A breach wick here and a close above is just, there's no stopping it. It's just going to go, right? Anything here is dangerous to go long because we now have a little bit of a structure pull. We have a doji close below. This right here signals that we should pull back to here, but I would say the safer play, because of how bullish this is and we're flat bottom still, right? You would need to have an actual full breakdown, right? Like down into here before it sweeps. I would prefer it to pull back because I want to kind of more play longs, right? But I really would prefer it to come back to here, somewhere in here before I do that. But it's definitely showing a lot of strength. So we'll see if it holds. You guys have seen this a million times in market open though, where we'll start to show strength and then all of a sudden we just get a deep breakdown, right, on a pullback. So let's just watch it. Now let's look at the macro. We don't want to lose sight. We do have a hammer with the close above, which doesn't surprise me why we're pushing, right? The 730 I think is going to be a big level because as we push down, we get a close below there, right? We're pretty OA to here. We should get a pull to there, which would be a better setup for a long play for me. I'm not a big fan of just jumping into the continuations. Unless I get a breach wick close above up here, then that would be a good continuation, right? We're like out of range in almost everything, guys. Like this is pretty out of range. We got, you know, the bullish stuff here played out, but all of our trap prices are like way down. Yeah, we're definitely pushing here, guys. Let's see. So you see that DOM drop? I just saw it in the corner of my eye. Let me see if we get another one. Now, mind you, remember when we're big, pushing heavy like this, one is not really enough for me, right? Especially if it gets absorbed. So let's just watch it. If I see it go drop, drop, right? Then it's gonna come down. But I saw that DOM drop. See, there's another one. Let's see. See how? Do you guys see that? There's another one. Yeah. See, this is the part I was telling you be careful because the sellers are gonna likely come in. And so there they are. Okay, let me see. I just got that one. Let me look at something, guys. So we're getting the pull. So we should get to here, right? 89. If we get to here, we can definitely bounce because now we're halfway liquidity, right? If it doesn't get to there and we start seeing DOM jumps, it's just a healthy pullback and this thing's about to jump really hard. So let's watch it, but we should get to at least there, right? If this breaches here, breach wick closes below, then it should get to there. Breach wick closed below, that reclaims is a bear trap, right, on the micro. And so that'll tell us that the bulls are definitely strong.
The 5-minute time frame shows a bullish trend with an LSMA above its 200 EMA, indicating underlying strength. The 1-minute time frame also displays bullish momentum, with the LSMA trending higher and the Heiken Ashi candle closing green, suggesting upward continuation. However, the most recent price action on the 1-minute chart shows a failure to make a new high after a significant push, and the current price is trading below the prior high, raising concerns about immediate continuation. Sentiment. Bullish pressure. Confidence. 6 out of 10. Reason. Higher time frames, 5 minutes and 1 minute, show a clear bullish trend, and the 1-minute Heiken Ashi candle closed green. Concerns. The 1-minute chart shows price failing to make a new high after a push, and is currently trading below a recent high, indicating potential choppiness or a minor pullback that could trap longs. Summary. The overall trend is pointing upwards, with stronger indications on the larger timeframes. However, the most recent price action suggests some hesitation and a possible pause before any significant upward movement. It's prudent to wait for a clear continuation signal or a confirmed rejection of lower prices.
Yeah. In a nutshell, his concern, right, is that we came up and we're pulling back, right, pretty heavily. Now, when he says things like, we're pulling back heavily, be careful, it could be a pullback in the larger trend, all that, wait for confirmation. That's where I kind of teach you on that development program, right, where we want the confirmation. To go south, we got to play what's our risk, what's our reward. To go south there, as you're pushing down, right, you would want that breach wick closed, and then that's your better trade. Anything short of that, we are push, halfway liquidity, and it can push again pretty heavily too, right? And so that's where we're seeing that push. See that? Now we're getting the breach wick. This is going to be a big one because you guys know in the micro, when we get this rear back test again, kind of little minute double bottom, this has got to create a higher high and then hold that high to get strength, right? Now it can push rear back halfway and then push again. But if it pushes here, rears back, and we lose that halfway, it's likely going to create a lower low. And then that's what's going to push us to there. So where this bounces is huge on the micro. See how it's trying to start, just trying to bounce on that area there? Let's just watch this. Again, you got to always ask yourself questions, right? We had a push, halfway liquidity, doji, trying to close above. We didn't quite even get to here. We might not be done because it's a pull push. If we fail here, it could still come to there. It's market open, so it's a little wonky, right? They're trying to shake out some orders. So we don't really have a clear direction. If I were to take longs, right, if you're doing entries directionally, you'd want to breach wick, close above, and that would be your OA. Here, you want to breach wick, close below, and that would be your trade. Now, there's a lot of room in here, right, because you're sitting at about $60 movement. So those micro scalpers that want to do it, right, you would look for those dojis close below, and then you'd be in. But you gotta it's got to be quick in, quick out, right? Don't get don't get brave with it. So we got the breach wick here. We got another one. This is big, right? Because we get the close above here. Again, it's pretty OA, right? But if we lose this high too much, right, with the hammer here, then we're going to get a little bit of a pull. I'd be curious if, you know, I mean, again, you guys all know from the pre-market, we should get up to 869 at some point. But, I mean, could it go directionally? Sure, but, man, I would just be so surprised if they don't, try to shake some trees with it first. Let's see. So we're struggling to break it, but all these candles matter here, guys. Right, we have a hammer into a doji, here into another doji. If we keep hammering or dojiing here, it's going to break. If we don't, right, if we start to get some strength here and we get the close, then it's going to pull back. Everybody right now is overly bullish, I think. You're either overly bullish or you're expecting it to be a top with a deep pull.
The 5-minute time frame shows bullish momentum.
So for the market to oscillate in here wouldn't even surprise me, right? But the pressure
Firms a bullish bias,
strong
with
right
price
now.
progressing higher and holding above the EMA 200. However, the most recent 1-minute progression shows some choppiness, failing to make a significant new high. The 15-second time frame indicates immediate bullish pressure, sentiment, bullish pressure, confidence. 7 out of 10. Reason: higher time frames, 5 minutes and 1 minute, are trending bullish. Price is currently holding above the 1 MEMA 200 and showing immediate bullishness on the 15 seconds. Concerns: the 1-minute chart is exhibiting some indecision and has not yet confirmed a strong continuation higher after the recent push. There's a lack of clear expansion beyond the prior immediate high on the 1-minute. Summary: the market shows signs of upward movement, with larger time frames indicating strength. While there's immediate positive pressure, the recent price action is a bit mixed, suggesting caution is warranted before a strong commitment.
Strong commitment. All right, guys, look at the micro. Remember we talked about all this pressure didn't really make sense. We pushed. We got our close above. This should give us a good push. Now, here's what gets a little tricky, right? This has to hold support. If we hit this, because it's the prior high and it's LISVA. A push, hit, push, close is going to have crazy propulsion. But, here's my but, because we're in market open. If we hit, we sweep this, and we lose that low, it usually sweeps pretty violent, right? And so see how it's starting to do it. Now, this low right here matters, this low. If it hits here and jumps, then it's just a stop hunt, right? They're stopping it out, and then they're going. If it hits here and breaks, it's got to go to there. If this closes below 39 and we don't go straight to there, bear traps are real, man. Like, shorts are going to get wrecked, and so you gotta have to be really careful with that. See the push, that push right there being violent like that. It should continue, right? And if it doesn't continue, if we go like this and we bounce anywhere short of like in here or here, the bears they're strong, but they're not strong enough, right? Now you got to ask yourself a question. This is our high. We breached it, got the close, and we couldn't quite get that secondary expansion. If we don't hold that prior high, you got to ask yourself why. Like I said, there's pretty OA up there all the way, right? Like, why would that collapse on there, on that? So again, now and like I said, guys, those joining late, you know, my disclaimer of today is looking at the TA and the pre-market is going to be tricky. There's going to be tricky reads, so be really careful. Keep your volume low today because there's going to be a lot of traps, I think. So we're going to see things like this where we had the bear trap that jumped. Right now, this could be setting up a potential bull trap, right? I don't know. We haven't, you know, until we get a break. If this were to come here, breach wick this, and then close, then this is a solid bull trap, right? Because it shouldn't have done that when we broke up there. So we're trying to identify what, you know, the market's doing, and is it doing what it should do or not, pretty much right now. So very minute. You have a little shoulder here, right? A close below there. Again, should pull it to there. Anything short, if it pulls it to there, sweet. That's awesome, because that means that we're kind of in a range state, right? And we can kind of play those scalps within the range state because it's still doing what it, like this one right here should have pushed to there. This breaking here should have pushed to there, right? And so that is really big because it helps us understand, are we going to oscillate? Are we going to trend? Are we going to range? The problem with most retail is that we tend to get very biased. We're like, oh, we're going up to the moon, I'm long. You know, we're going to go to the floor, or we're high in the range, or we have to come back. Like, these are all words we say. And when the market decides to oscillate, it ends up wrecking both sides, right? Because you get the push with the deep pulls, and it wrecks the longs, and then you get the deep setups for the drop, and then it wrecks the shorts, right? So all these movements matter, guys. So we have a push here, a pull. Notice how, again, it loves that halfway liquidity. So a pull into a halfway liquidity that pushes again is going to probably be pretty violent. Because, again, we got to ask ourselves the question. This should have just jumped. This being our kind of head and shoulder, albeit not pretty because you have a shoulder.
The macro bias,
shoulder.
defined by the 5 minutes time.
We'll let him say in a second. Why did it not just drop, right? Why are we jumping up there? So, but we are still below the 15
in the 5 minutes EMA.
So let's see what he says.
200 at 25,581.78. The 1 minute time frame also shows a bullish trend with its LSMA at 25,707.20 and EMA 200 at 2567. 3.30, along with a bullish anchored VWAP. However, the most recent price progression on the 1 minute chart indicates a pullback after a push, failing to hold highs around 25,763 and showing lower lows with a red Heiken Ashi candle. This short-term failure to continue immediate upside momentum creates misalignment with a high probability continuation entry despite the overall bullish structure. Sentiment. Bullish pressure. Confidence. 3 out of 10. Reason. The 5 minutes and 1 minute timeframes exhibit clear bullish structure, with price trading well above their respective LSMA, EMA 200, and anchored VWAP levels. The 5 minutes LS.MA slope is strongly positive, confirming the prevailing upward trend. Concerns. The immediate 1 minute price progression shows a pullback, with price failing to create a new higher high after the prior push and subsequently making lower lows. Rejecting recent highs around 25,763. The 1 minute Heiken Ashi candle is red, indicating short-term bearish pressure, which signals a misalignment for an immediate continuation entry within the broader bullish context. Summary. The market is generally moving upwards, with strong signals from the larger timeframes supporting a bullish trend. However, on the shorter 1 minute chart, price has recently pulled back from its high point, indicating some temporary selling pressure. This short-term reversal means it is not an ideal moment to enter a trade for immediate upward continuation, despite the overall positive market direction.
And he's really not wrong, right? So, again, this indicator, we got orange, we're yellow. Now, the only thing that is big is notice how we bounced right off that 730 that we were watching, remember? Halfway liquidity, we bounced right off it. We're getting hammers in an area that we should have resistance. That doesn't really scream short yet, right? It screams more long. The pressure's more northern, the DOM is more northern, but at the same time, right, he's kind of seeing this as when he analyzes it, he's going to look at these higher highs as it creates it, and he wants to see strength and kind of a hold above, like all that stuff, right? Brent, I think you got a hot mic.
My bad.
You're good. And so he wants to kind of see that, right? So he's going to identify, like, hey, what's the momentum, the pressure, what do we need, right, to get that continuation, and sometimes he likes it, sometimes he doesn't. As bullish as this looks, and the fact that we tapped here, the fact that we keep halfway claiming, the fact that we have another bearish pattern that should have dropped that didn't, to me signals that we are pretty bullish, and that there's a more probability for a push. But I have concerns that, again, we could be very trappy today, right? And so I think I'm curious to see how it plays out, because he's got a lot of numbers in here. You guys see all that? But notice, even as bullish as it kind of looks, he's still only calling it like 3 out of 10 on the pressure, right? He doesn't think that it's real strong. So when he does that, you just got to be cautious, right? Because these things all matter. See here, when we broke this and we lost it, now we broke it again. And if we lose this, it didn't even get a higher high on an area that is pretty OA, right? Now we know Lisma is starting to curl. If you want to take a safer play, like a short, you know, you would want to wait for this to come down, breach this, like a breach wick, close below, and then you can take it to the 200. Because it's pretty, yeah. So you have OA as well here, right? Some good OA. So this would be a safer play. Taking a short anywhere else is dangerous because we could easily hold this. You know, if you want to do defensive plays or laddering short, because of as we're coming up into here, right? Like those that I've taught that in the mentor group, you know, you could do that. Just spread your rungs out because you may have to fight it up to here, right? But I kind of agree with him in a sense that it's there and it's holding things that look like strength, but it could be a trap that, you know, sweeps hard south, right? So see this? So far look at the fact that he kept confidence so low.
The overall market on the 5-minute and 1-minute time frames presents a strong bullish structure with price well above key moving averages and positive slopes, indicating a clear underlying upward trend. However, the most recent 1-minute price action has failed to sustain a higher high after a push, pulling back significantly. This lack of immediate continuation, coupled with current price trading below the 15-second LSMA, suggests internal weakness and prevents a high probability entry at this moment despite the dominant bullish bias. Sentiment. Bullish pressure. Confidence. 3 out of 10. Reason. Higher time frames, 5 minutes, 1 minute, exhibit strong bullish structure with price well above key moving averages, LSMA, EMA 200. And positive slopes, indicating underlying strength. Concerns. The most recent 1-minute price action failed to create a sustained higher high after a push, pulling back significantly from recent peaks. Additionally, current price is below the 15 seconds LSMA despite its bullish trend, indicating a lack of immediate short-term momentum and potential for a deeper pullback, thus contradicting clear continuation.
Keep saying deeper pullback,
this does not present clear structure for immediate continuation. Summary. The larger market picture shows a strong upward trend, indicating underlying buying interest. However, in the very short term, the market struggled to maintain its recent climb and has pulled back. This means we should be cautious and wait for clear signs that the upward movement is firmly resuming before considering any trades.
Firmly resuming, that's new. Guys, look, I don't know. I see things here that look like another possible bear trap to push us north, but the last couple of times he kept using words like, I don't know. This doesn't look good. It could set up a deeper pullback. Like, at some point, we just, like, floored. And I'm like... So every time he uses... You guys notice that? Like, he doesn't use the word deeper pullback a lot. I don't know if it's going to work again. You know, guys, he's still in beta. We'll see. But it definitely puts a little caution in, like, maybe I want to have a little more confirmation to be long. All right? When
There's a gap, though, down.
Yeah, down here?
Yeah, down there around 680.
Yeah. I don't know, man. I just look. Again, guys, use caution as you're trading today because I think it's going to be a little wonky. But this right here, the 1 minute, you know, when it came down here, we should have breached that. You know, not sure why we didn't at least breach that. We are kind of holding that 730, right? I want to see the breach close below, and then that likely is going to move pretty good. Now we have Lisma at 702, 701. Also, we have one of the VWAPs we have, right? So that could kind of sweep into this low and then give us a big old push, right? Which would actually be almost kind of like y'all see kind of like the shoulder, right, setup. But yeah, I looking at this, you know, we'll likely get there, but it's tricky because, you know, for me, you guys know I love to ask the why, right? We're pushing. If we breach the one thing that has like OA, like why didn't we just go, right? Just doesn't make sense to me, right? And if you look at it, we had a bear set up here that should have pulled to there that didn't, so that also didn't make sense. So now we have a bear trap into a bull trap, right? And then same thing, right? Sets up again into another bear trap, into a close above it, into a lower high bull trap. So it's kind of at least playing out to what I thought, where I was like, be careful, because it's going to be a tricky day. Which is proving to be so far. So for me, you know, I don't know. If I was a market maker, again, I would give the bears some hope, you know, kind of like go down, come up, create like a hammer absorption back south, give the bears some hope, and then, you know, maybe even break this 200 right here with a close, and then I would just just pump it on them, right? Because you look, there's a trend line structure, right? And so we could break that 200, and for those that like to trade the 200, right, you're in like slam right there, and then, you know, big jump right there would just destroy you. So looking at our buy sell signals, guys, we haven't got anything yet other than the buy that it gave there. We are getting our first micro sell. I think that's our first micro sell in like a while. We were looking at that at the pre-market. I think it's the first one since like yesterday. Really, like we've been pretty bullish with it. I think there was a couple micros, but definitely not on the 1 minute yet. So we got our first micro sell, but remember,
The 5
ideally,
minutes
I'd like
time frame
the
shows a
1 minute.
bullish trend with price above the EMA 200 and LS. MA. However, the 1 minute time frame is exhibiting bearish pressure, as indicated by the red Heiken Ashi candle and the LSMA being below the EMA 200. The most recent 1 minute price action shows failure to push higher, with several attempts to move up being met with selling pressure, leading to a recent decline. This misalignment between the higher and lower timeframes, coupled with the bearish signals on the 1 minute, suggests a low probability entry. Sentiment. Bearish pressure. Confidence. 3 out of 10. Reason. The 5 minutes time frame shows bullish structure, but the 1 minute time frame is exhibiting bearish price action with red Heiken Ashi candles in. Failure to make new highs after attempts to push up. The 1 minute LSMA is also below the 1 minute EMA 200, indicating downward momentum on the execution time frame. Concerns. The overarching 5 minutes bullish trend conflicts. With the immediate bearish signals on the 1 minute time frame, there is a lack of clear continuation on the 1 minute after price has pulled back from prior highs.
See what we're rejecting?
Summary. The market is showing conflicting signals between the longer-term trend and the immediate price movement. While the broader trend is up, the recent action on the shorter time frame suggests a potential pullback or reversal. It's currently a cautious environment, and we are waiting for clearer direction.
Yeah. See where that rejected, guys? So this neckline right here really matters. 29, which we know 30 matters anyways. So if we breach through this with just not even trying, that is a deeper kind of structural like double top, right? That should at least have respected it. Now it could be a shoulder, right? So we definitely can be in a higher time frame. We can invalidate this one and still be within a higher time frame one. But if we build this kind of structure and we do come up here, right, to create the shoulder, and then we start to break down and we break that and we jump out of nowhere, that's another pretty bear trap, right? That we're about to just go to the moon. So these all matter in these plays, right? So we did come off of here. It's a bounce off the 200 EMA for the 15 second. It's a normal bounce. We got a breach wick, close above, should take it to there. That's what it should do. If we come back down with pressure and we actually breach wick this, the breach wick close below should take it to there at least with enough steam to breach wick it, right? So we want to see which way the pressure is within that, so because it's going to tell us a lot. So especially because that 730 is big. If you look at the macro, we have a hammer after a push, which is not always bullish or bearish. The close above the high is going to really jump. The close below the low is going to really drop. We know the macro is suggesting we should get to at least 703, but we have a gap fill all the way to 676, right? So if you think about it, that gap fill is right about here, which would allow this to play out, come down, hit that, and then jump like I was saying. Like when I was joking about being a market maker, right? We'd fill the gap and then to the moon. So let's keep watching the micro. Yeah, you see? Yeah, I just saw your comment, Brent. Yeah, it's and you can see, right, it's rightful so. Look at how much wicks we're getting down, and then look how much wicks we're getting up. Like, it's a battle right now. Guys, it's just an absolute battle. So, with no clear victor yet. So, for me, when I get into these battles, I'm not really trying to choose or change a bias, right? I just want to stick to the charts, what I know, what it should do, and this is why you guys know I heavily revert to the micro. Because if the micro is doing what it should do, it tells me a little bit. So there's the sweep that I was kind of waiting on. This is going to be big, guys. Breach wick, close, we'll have enough to breach wick that. If we breach wick this, close, it's like OA to there, right? Which would put it in theory. Now that we have a low shoulder with a close below, or we don't have the close yet, if we get the close below, that should have enough steam to push it to here. And if it don't, if we just hit here and reclaim that, that's a big bear trap, guys. Because it shouldn't do that. So we do have an absorption candle. Remember, measure high, measure low, close below, we drop, close above. It's a fake out. We're going back up, right? So we are below Lisma, and we did reject off it for 3 candles. So I want to know, because we know that this 729, 730 should act as pretty good resistance. If I'm seeing hammers, dojis, propulsion, dom jumps, probably shouldn't happen there, right? So let's watch it. So we got a nice little sweep. That went deeper than it should have. Let's see if we get the hammer here. Close below, we'll have enough to push it down there. Close above it, or we should breach wick that.
The 5-minute time frame shows a bullish trend with price above the EMA 200. However, the 1-minute time frame is exhibiting bearish characteristics with price below the 1-minute EMA 200 and a red Heiken Ashi candle, indicating a potential pullback or shift in momentum. The 15-second time frame shows a bearish LSMA slope, reinforcing the short-term bearish pressure. This setup is not high probability for a continuation trade in either direction due to conflicting signals across time frames. Sentiment: bearish pressure, confidence. 3 out of 10. Reason: the 1-minute time frame is showing bearish signs with a red Heiken Ashi candle and price below the 1-minute EMA 200, contradicting the bullish bias of the 5-minute time frame. The 15-second LSMA slope is also negative. Concerns: conflicting signals between the 5-minute and 1-minute time frames.
So we're tapping
The
Lisma.
1-minute Heiken Ashi is red, suggesting
breach.
weakness after a bullish push on the 5-minute. The market is showing mixed signals across different time frames. While the longer-term trend is positive, the shorter-term movement suggests a potential drop. This makes it difficult to find a clear and reliable trading opportunity right now. It's best to wait for clearer direction.
Yeah, and so you can see, even he's not entirely sure on it and he's not wrong, right? Because it's doing things, it's setting up structures, right? He's going to look at the prior highs, like we're getting the lower highs, we're getting the red stuff, we're coming down. It's not matching the macro. And he's just saying it's difficult, right? Because although we should be bearish, his confidence is low because it's just not really doing a lot of bearish things, right? And so he's kind of rightfully so hesitant on increasing his confidence of the bearish. Now, we know from what we said, creating a shoulder here is within reason, right? And so, but we don't want to have any kind of explosion. If it does burst through the ORB with some kind of steam, or we breach this and we actually close it with some push or steam, again, it's a pretty head and shoulders that just got invalidated. That's another one of them, right? So now, mind you, remember we talked about this. I don't know if you guys are trading this or you took any trades with it. It's if you don't trade heavily today, it's totally fine because I feel like there's gonna be a lot of traps. But this right here was our breach wick. We reclaimed it, right? Now we have absorption with a doji. The close above the absorption, right, is what gave us a little propulsion, right? That gives us our breach wick. Pull back, we get the close above. Should give us enough to breach wick that. If that don't get even to it and we sweep back below, right, then my theory of us being in a consolidation area, the way this is looking, would hold. So, but let's see if we get it there. So we're getting a little buy pressure where we shouldn't, with resistance. I'm telling you that they're a little stronger than the bears, but let's look and see. I need to watch the DOM here. Remember, we're still within range of this shoulder, guys. So watch the DOM because we're in the upper portion of it. So if we're getting DOM drops, right, that's going to tell you that it's about to shift. If we're getting DOM jumps in an area that it should have DOM drops, It's about to invalidate and jump. See how we got the little DOM jump? So I'm looking to see if we get any kind of DOM drops, right? We do get a rebuy there. We are getting the buy there. Either way, you can kind of see, you know, we did get the Lisma. Kind of got the close below the wick, right? Because that's your wick, and we didn't drop. So it's kind of already a bear trap. But let's see. So this is the third time, right? Now think about it from a structure standpoint. You guys know I've studied this with you guys. We push, rear back, push, create the lower low. Try again, can't do it. Creates another lower low. That rear back usually is the one that can push. If that one can't push and we actually reject on this one, that rejection will be deep. But usually when you get that deep rear back and it goes straight back to it, it's the one that goes. So be careful on your shorts, guys, for right now. If you would want to try to short anything, you got to reclaim back below here. Right, get back into this. But we've already invalidated a pretty good bearish structure.
The 5-minute time frame shows a bullish trend with an upward sloping LSMA. The 1-minute time frame also exhibits bullish momentum, breaking through prior highs, which aligns with the higher time frame. The 15-second time frame shows a slight bearish slope on the LSMA, indicating potential short-term weakness against the dominant. Bullish trend, sentiment, bullish pressure, confidence. 7 out of 10. Reason. The higher time frames, 5 minutes and 1 minute, are strongly aligned bullish, with the 1 minute showing a breakout above recent highs. This suggests a continuation of the upward trend. Concerns. The 15-second time frame LSMA slope is negative, indicating a potential for a minor pullback or a short-term struggle against the prevailing bullish momentum. Summary. The market is moving upwards, with buyers showing strength on the longer time frames. While there might be a small pause or dip expected in the very short term, the overall direction is pointing higher. This setup suggests a good opportunity to join the upward move if confirmation appears.
Said join. He's never said join. You little shit. We literally told him you're not supposed to tell, say the word entry, right? It's kind of what we focused on. So did he just literally figure out a workaround to say join instead of entry? I feel like you walk in a gray area there, Neo. Walk in a green area. Guys, now remember, hold up real quick, right? Here's our top. We have a sweep. It should have went a lot higher. This pullback is huge because that's more stop hunt right now as versus continuation, right? So if this ended up coming down with any kind of violence, that violence is going to be pretty deep. It's not really, it looks stop hunty, right? Because we have the highs and the way it came up and absorbed so quick. If it holds these levels, it's going to jump, right? Even in anywhere in a halfway, like somewhere here, right, it could still jump. But if we get some deep violence right here, that could be a little stop hunt. Definitely could be, guys. So let me look at something. Yeah. So this will be the third time that we've pushed through here and might fail that, right? So let's just see if we can get a bearish thing to play out again. So we know we have a hammer pull. We lost what we should have hold. We have a breach wick. For us to get a rear back is fine. If we get a close below there, it should come to there. Let's see if that plays out. If it does, then we're still just oscillatory, like I was thinking. But if we end up bouncing here and it just explodes, we're going to there, which is what I talked about. Which I think we're going to get to there at some point. I just don't know if it's going to be really quick or... Yeah, like, look, a lot of you in here are parents, and I have 3 kids, and so I'm very familiar with the gray areas that young kids like to walk where you're like, you're not allowed to say that, and they're like, what if I say it like this? And I'm like, you walking a fine line. Right? And so I feel like that's what he's doing now, because I'm like, I know behind the curtain, right? So I look at it, and I'm like, you aren't told you can say that, or you're not supposed to say that. And then you know, he's like, I can't say entry, but what if I say, like, it's possible I would join the trade? Like, you little shit. Oh, man. AI is such a trip, guys. Such a trip. Alright, so again, we got another breach with a pull. They're just consistently setting up bearish plays that are just invalidating. So that should tell you be really cautious on shorts. So let me look at something. Yeah, so we're getting our little expansion now. So now that we got a little expansion, right? We want to, this matters, right? So we have these highs. We ended up pulling. We got the
The
breach,
market
we
is
got
exhibiting
close.
robust bullish momentum across all time frames. The 5 minutes, 1 minute, and 15
Robust.
seconds time frames are fully aligned, showing clear bullish structure with positive LSMA slopes and bullish EMA trends. The most recent price progression confirms continuation, breaking above prior highs and expanding, which signals a high probability bullish setup. Sentiment. Bullish pressure. Confidence. 8 out of 10. Reason. All time frames demonstrate clear bullish structure with higher highs and higher lows, supported by positive LSMA slopes and bullish EMA trends. The most recent price progression shows strong continuation, breaking above prior highs with expansion, indicating persistent buying intent and strong timeframe alignment. Concerns. Following a strong extended push, the immediate price action could experience a pullback or a period of consolidation. Any failure of the current expansion to hold above the recently established highs would invalidate the strength of this move and could signal a trap or reversal. Summary. The market is moving strongly upwards, with all major timeframes pointing to a bullish direction. Price is consistently pushing higher, creating new peak levels, which confirms the upward trend. This consistent upward movement indicates a high chance for prices to continue rising, making it a favorable situation for traders looking to buy.
Favorable. Not too shabby there. Not too shabby. Guys, how are you guys doing? At the very least, hopefully, my concerns of being short are helping you on that. And so, how's everybody doing? Doing good? Good deal. So again, we can go pretty high here, guys. Now, for us to push, remember, here's our highs. We push. At some point, for us to come back and retest that high is usually pretty probable. So let's see if we get any kind of structural break of that. So, but we definitely have a long way that we can go up. Let's see. I'm watching the micro. So this is going to be a big one for me because you guys see how we have this structure here. These are our highs. Any kind of pull hits that with a DOM jump, it's going to keep going. If we breach those highs, then that's when we'll get a pretty good pull. You're green 180, sweet. Good job. Yeah, this is a tough TA, man. It's a tough one today. But just because it keeps invalidating, right? We're so high in the range that we look for those bearish structures, but yet we just keep invalidating them one after another.
Yeah, man, this is one of those days where it's like, get your $50 and then get out and then wait, and then get your $50 and get out and wait.
You're not wrong, sir. The biggest thing about days like this is these are the days where part of you wants to try to find the top, and then you get Rex trying to short the top, and